Hello and welcome to another Smaulgld live stream. It is Sunday evening, the 1st of September 2019. It is Labor Day weekend. And it is Solid Gold Sunday with Smaulgld. So tonight we're going to discuss almost only gold. We might touch a little bit on silver. Last night we did Saturday Night Silver with Smaulgld, where we spoke pretty much exclusively about silver. But let's get into gold. Now, the gold price right now, there is trading, opened up an hour or so ago, and it's up. It's up to $15.28. It's up about $9 or $10, holding above the $1,500 mark now since about almost a month now. It hit $1,500 around August 6th, and it has not really dipped below that, barely dipped below that into the 1490s. Just for brief moments, and it's been as high as about 1540, 1550, and right now we are at about 1530. Silver is also up just a little bit, about 9 cents. It's up 0.5% to 1843. And tonight we're going to take a look at the gold versus other currencies. We're going to take a look at the commitment of traders. I've got some new charts on Chinese gold imports and also Chinese silver imports. Some surprising differences there. We're going to look at the gold ETFs, and I think that's about it on gold. Oh, we're also going to look at gold with respect to what's going on in China and, of course, negative interest rates. Let's start out with the gold ETFs. And the gold ETFs are really not hard to fathom or to understand how it works compared to the price of gold. They pretty much follow the price of gold. So when the price goes up, the flows of gold go in, and when the price goes down, the flows of gold goes out. It's not very complicated. It's been pretty much like that since 2013. You're looking at the chart there, you can see the flows follow the price. The price goes down, the flows go down. And right now, you can see there's the most gold in the ETF since back in 2013 when this trend started. Record amount of gold in ETFs is about 85 million ounces. We're at about 81 million ounces right now. And these charts are all on Smaulgld.com, so we won't linger on them, but you can go to Smaulgld.com. The link will be below this BitChute, below this YouTube, and you can go check out the chart. And it has all the different ETFs on there. Let's take a look now at how gold is doing versus, before we look at other currencies, we've looked at gold versus the Dow before. Let's take a look at gold versus Dow and gold versus the S&P 500 over a period of time. Now, despite gold's recent burst in the last 4 or 5 months, it's been pretty much an even bet to have held gold from about mid-2015 versus the Dow. And this chart is showing the period of time. Most of the time, the Dow is outperformed, but it's the long horse race. And if you started in 2015 and you've been holding on ever since to the detriment of holding the Dow, you are just slightly ahead of the Dow now. Now, from 2000 all through 2018, you were behind. To 2017, you were behind. You were ahead for a brief point in 2016. As you can see on the chart, gold versus the Dow. Gold is the gold line and the Dow is the black line. And the Dow-Gold ratio right now is about 17-1. Let's look at a longer-term Dow versus the gold. Now, it's pretty amazing that the gold can actually beat the Dow, because gold cannot get any better, can't do anything, doesn't improve. This is people, companies, trying their hardest to produce profits and drive themselves higher with an assist from central banks, from interest rates, and they barely can keep pace with gold. Now, here's a longer term. Now, since 1970-74, same thing. You're probably a little better off with the Dow holding it. There was a period of time from about 2006 to about 2012 where you did better than the Dow, and then you've done better with the Dow since about 2016, but pretty much gold has held its pace ever since it's been let free. Meaning, since Americans could hold gold in 1975, the price of gold was no longer fixed at $35 an ounce, and gold has managed to hold itself up against the Dow, you can see there. Now let's look at the S&P. The S&P is a little more of an aggressive exchange or aggressive basket of equities, but the last 5 years you are now ahead if you held gold versus the S&P 500, as you can see on the chart there. The S&P hasn't done as well as the Dow, it looks like, but there you can see the ratio and the gold outperforming the S&P 500 for the last 5 years. Let's pull out a bit and look at the last 10 years from the S&P 500. Well, you're not going to win with the S&P 500 over the last 10 years, but you're getting close. But you well outperformed the S&P 500 for the first 5 years, from 2009 to 2013. You're better off holding gold. So this is kind of showing that over time, gold holds its value. Not just against the dollar. It goes up against the dollar, goes up against every other currency. But even stocks. So if you think about this, yeah, you miss trading opportunities in the S&P and you miss the hot stocks and so on. If you're just going to park money either in the S&P or the Dow, or you're going to park money in gold, it looks like, at least it's not investment advice, it's just obvious from the chart, that gold's going to hold on. It's not going to get blown away by the stocks, even though stocks should blow it away. I mean, they're trying their hardest. They're getting an assist from government, central banks. There's far more capital chasing stocks, and yet gold manages to hang in there over 5, 10, 20 years. Let's look at the S&P over a longer period of time. The story's not as pretty with silver, but let's look at S&P for 20 years. And look at that. Pretty much equal. Right now, if you bought in 1998, you bought both the S&P and gold, and you just didn't do a thing, well, there you are. You're right up at the same level. Now, I believe the problem with the index is you're actually going to be behind a bit, because if you hold the index, they do reinvest some dividends, assuming there's dividend stocks in the S&P 500. So they get reinvested. But also, the S&P 500, they're not the same stocks today that they were 5 years ago, 10 years ago, 15 years ago. So it does require active management. There's fees, even if you buy an index stock, which probably exceed your holding costs of gold. So it probably still balances out. I haven't done the exact numbers. But you can see how they're very close. There's a 20-year S&P versus the gold, and right now they're almost neck and neck. And let's look at a longer term S&P. That's 20 years. I think that's the longest I've got. Yeah, let's look at silver though. Now, silver I always say is not the store value that gold is, and there you go. 20 years holding silver versus 20 years holding gold. You had your day in the sun from about 2008 to 2012, and you've been out of luck for the last 7 or 8 years. The divergence has gotten greater, and silver has not held its value versus the S&P. So obviously gold is a better performer. However, you do see that spike there in the middle of 2011. Silver does always have the potential to rise fast, but in the last 50 years, it's been a spike and dive event. You'll see it ratchet up in 1979, 1980, and then boom. And that's typical. It's not really silver, but in anything that goes up that quickly generally comes down just as fast. Gold's, even the S&P, these rises are more gradual. When silver rises, it really just takes a big rocket ride, and then boom, down it goes. All right, let's look at gold now. Back to gold in your different currencies. The euro's getting pounded versus the dollar, so the euro's getting pounded versus gold. Look at that. Gold now at nearly 1,400 euros, 1,300 an ounce at 13.83 right now. Gold just motoring higher against the euro. You can see it's gone pretty much straight up there. We didn't cover that one last week. That's the euro. Now, what about the rupee? Now, this is a problem for Indians. Look at the price of gold. It's really gone up to 108,000. That's a record now. This probably will curb Indian gold demand imports. We saw Indian gold demand through the first 6 months the other night. If you haven't seen it, you can go check it out on Smaulgld.com or on BitChute. We did a video on what's up with Indian gold demand. It was strong through the first 6 months physical, but I suspect the reports are now that it's starting to fade a bit. But that can be offset by investment buying in the West and in China. But the physical gold demand generally falls a bit in India for two reasons. Well, three. They have import duties, but that's always there. And then they have the goods and services tax. They can have a bad monsoon season, which could affect the fall, late fall, end of year buying. And of course, if prices are higher, that can curb physical demand. But right now, very high price versus the Indian rupee. Let's take a look at another. Any other currencies? Yes, let's look at the famous yuan, the gold-backed yuan. Not really. Well, the yuan is also getting clobbered across the board, and it's very expensive now to buy gold in China. Although, let's switch over. There's your gold. Again, all these charts are on Smaulgld.com. You can check them out later tonight or tomorrow morning, or whenever, because they'll be up. But let's look at a different chart now with China. Now, China, the yuan is in trouble despite all of the China to crush the dollar nonsense stories. Let's look at Nick Laird at Gold Charts of Us has managed to get another source. So what we've been covering for the last 5-10 years on China has been imports into Hong Kong, into China through Hong Kong, but we didn't really have a net figure, which isn't that important for gold in China because they don't really export much gold. It's almost all imports. It's really illegal to export it. I suppose some of the gold that they do export is to be recast somehow. They don't have a refining capacity or they need to get it made into specialized jewelry. But for the most part, China has the #1 gold mining production in the world, about 450 tons a year, and then it imports massive amounts and exports very little. So what he's done is he's figured out here, and it's true, he's got, you can see in the green at the top, the monthly amounts. You're talking 1/2 ton of gold goes out, at most 5 tons a month, but generally not that much. Usually 1 or 2 tons heads out. But coming in, 50 tons, 150 tons, 200 tons, 75 tons, 80 tons. That's the bulk. And then what he does is he has a net, that's the blue is the what's imported. The red is the net import export total. And you can see in July, 40 tons came in, 43 tons. In June, about 55. In May, about 75 tons. In April, 160 tons. These are big, big numbers, net numbers coming in. And last year, it looks like May, in June, they pulled in 200 tons of gold. These are Indian style numbers coming in, and keep in mind, India imports all of its gold. China is this is icing on the cake. This is what they're importing in addition to their world-leading gold mining production. India doesn't really have any gold mining, so China really is the big buyer of gold, even more than India. India also buys a lot of silver, and as we're going to see, China doesn't. China really, and we've talked about this before, the United States investor silver numbers are bigger than China's, not on a per capita basis, but also on a total nominal basis, which means that Americans buy more total ounces of silver for investment than Chinese do, and the population of China is like 4 times the size. So Chinese don't buy silver, they buy gold, and we're going to see that now in the exports. China has a decent mining of silver too. In addition to being #1 for gold, they're #3 for silver. And again, we saw that last night. So if you missed it, you can check out last night's BitChute on YouTube or go to smaulgld.com. We talked. I think the title of that one was stockpile surge and Indian silver imports. But let's look at what China does with its silver imports net. Now we saw with gold, very little leaves the country and a lot comes in. But look at India. I keep saying India. Look at China's silver import exports. It exports about as much as it imports. And the net amount, is, well, it actually imports a bit more. But still, if you look at the exports, it does export a lot. 250 tons a month sometimes, 150 tons, 200 tons. And it imports 300 tons, 400 tons, 500 tons. But on a net basis, it's not that big. So last month, India imported 32 tons. I said India. China imported 32 tons. And if you look at how much gold they imported last month, so 32 months China imported in July, well, they imported 43 tons of gold. So figure that one out. They net import more gold than silver. India certainly imports more silver than gold. They still import a lot of gold. It's just that India imports like 8,500 tons of silver a year in a record year. And China, might import 1,000, 2,000 tons. So it's not the same silver binging that India does. China is just not, it's not a big silver. It doesn't have the same silver demand. It has silver demand for solar, but the investment silver is not there. The silverware demand is not there like it is in China. All right, now speaking of China, this whole China to crush the dollar story has gone away. What's interesting is that this China gold pumper story, that China was so great and China's productive and the U.S. is just creating debt and sending green pieces of paper, toilet paper to China while China was building everything. They were never, ever looking at the debt Ponzi scheme that China was. China was borrowing more money. Oh, but they owe it to themselves. China's always been a house of cards, and it's very surprising to hear these gold pumpers who presumably are Austrian economists, they like sound money, praising China and saying China's more capitalist than the United States. Was complete nonsense. That's state-run. So you got state-owned banks funneling money to state-owned enterprises, building state-owned projects that have no basis for market demand. They just build them to make them, to create jobs and GDP, bridges to nowhere, and so on. But yet the gold pumpers pumped that story forever, and it was going to be end of the dollar. And the whole thing was, if the dollar goes down, then their gold goes up, and they're all going to be rich. That was the idea with the China to crush the dollar. Now it's and part of that was, I think, was driven on the let's blame Obama because Obama is a left-winger. He just printed money. The Fed is our enemy, and they've created this problem. Well, something changed in 2013. We didn't lose Obama, but the Fed stopped QE. The Fed stopped printing the money. The Fed promised to stop and to raise interest rates and to run off its balance sheet. At the same time, China continued going into overdrive. ECB did QE. It's now larger QE than the U.S. Fed ever did. Bank of England, Bank of Japan, all this massive money printing, buying not just of their own bonds, but of ETFs in China, Swiss National Bank buying stocks. All the other central banks actually went overboard following the Fed's lead back in, from 2009 to 2013, and they went one step further. And China went like 20 steps further. And so this idea that the U.S. is this profligate, debt-ridden country to the exclusion of all others, like China, which was supposedly some sound money paradise because they bought gold, that's complete nonsense, but it's become very apparent. I don't think even the gold pumpers believe it anymore. But what's interesting now is you get the mainstream media talking about end of dollar hegemony and dollar collapse. Why? Because they don't like Trump, and they figure That's a good narrative. We saw J.P. Morgan come out with that nonsense. We saw Mark Carney, whatever his name is, the guy who runs the Bank of England, give that silly speech about end of dollar hegemony and the yuan being the world's reserve currency. This is all the gold pumper garbage we used to hear 4 or 5 years ago. Some of them still say it. But this idea that China is going to crush the dollar, look at the chart here. China's getting crushed. It's becoming obvious to the rest of the world. And the central banks never held Chinese yuan. It was all gold pumper stuff, petro yuan and gold back yuan and China to crush the dollar and game over and game changer. And COMEX is going to default and China stands for delivery and China's going to roll its gold out into a stadium like countries do. I mean, this story was so wrong and so obviously wrong and is now completely out in the open that it's wrong. But we're now seeing the mainstream media sounding like gold pumpers. And the gold pumpers really haven't abandoned this story. They're kind of on autopilot with this. I mean, Carney was talking about maybe we need a new world reserve currency. Can it be the Chinese yuan hegemon? Well, let's take a look at a couple of stories. And as I said, the Chinese yuan isn't ready for prime time. Can't be. Not if you have capital controls. Not if it is subject to devaluation. Not if they just print and there's no transparency whatsoever. You think the U.S. numbers can't be trusted? A lot of people complain about that. The Chinese numbers can't be trusted. Well, look what's happening here. China clamps down on capital flight as yuan weakens. So this intervention, at least the thing with the dollars, it floats around like people say, like toilet paper. It's all over the world. And in fact, as many dollars as are out there, there's a dollar shortage. But so much for the Chinese yuan as the new hegemon reserve currency, Mr. Carney. You cannot have a world reserve currency with capital controls like that at all. And here's another story, something I've been saying for years. I don't know who this guy is, but the story is China is underestimating its $3 trillion dollar debt. That was the point I've been making. They kept saying, but China owes it to itself. Yeah, but it owes dollars to itself. All of its borrowing, most of its borrowing is in dollars. So they owe dollars, so they need to find dollars. That's the idea they're going to dump treasuries and crush the dollar. Yeah, if the yuan continues to depreciate, China could face a debt crisis that could trigger a financial crisis. And hence, as I've been saying, yes, China may be the reason gold soars. But that's because we may have a financial crisis brought on by a Chinese debt crisis. That will cause gold to soar, not the gold pumper, China crushing the dollar, gold, back yuan, petro yuan, COMEX default. Now regular news outlets are noticing. It's obvious that China is the massive debt Ponzi scheme, far greater than the United States can ever hope to be if it really wants to. I mean, China has already admitted, their own central bank governor said we've probably already passed our Minsky moment where there's no turning back and there's nothing we can do to stave this collapse off. And they not only can't build any more bridges to nowhere, and so they decided they're going to do infrastructure locally, like parking lots. There's just not enough parking lots you can build to keep everyone employed. And that's where they go out on the Belt and Road, and that's going to create a Chinese hegemon. Well, most countries have basically told China to turn around and go home because they don't want to be debt slaves and have stuff on the same model. Well, your country doesn't have a highway from this point to that point. It doesn't have a bridge from here to there. And they look at the Chinese and they say, well, there's no need for one. They say, well, we'll build it. And then if they build it, they will come. And how much they're going to cost? Oh, about $3 billion. And where you can get the money from? Oh, we'll borrow it. And if you don't pay it back, then we own the bridge and we own the port and we own the road. And what good is that? And what good is it for China to own that stuff if there's no value in it? So it's pretty obvious now that China's kind of at its wit's end here. And they're not crushing the dollar, and it's not game over. Now here's another one. Zero Hedge, the real helicopter money. Since 2009, finally they're reporting on this. China has created $21 trillion in debt. The broad money supply in the U.S., it equals the size of the broad money supply in the U.S. and the Eurozone. So this is what China's been doing, but None of your gold pumpers told you this. This was all going on. I've been telling you about this for 5 years. All they were telling you was China to crush the dollar. China's buying gold hand over fist. China's smart. Sun Tzu. They know. Yeah, they know. They know how to print money. They actually created paper money back in like the 1500s. At a penalty of death, you had to use it. Here's the other one. Daniel Lacaille. China had its worst month in 25 years. China's yuan devaluation is another proof of its dollar shortage. That is far from gold backed. He's picking up on what I've been saying. And that follows the same misguided monetary policies of other fiat currencies. I don't even know why he has to say this. Of course they do. But it's because the gold pumpers have made it out to be that China was just this productive hegemon and was doing everything right because they were buying gold hand over fist. No. They and the United States was somehow the profligate country. They're all profligate. But it's not incorrect to say the United States has a debt problem. But to then point to China, which debt problem is 10 times worse, is ridiculous. But that's what people have been doing. And it's finally being pointed out because it's so obvious now. The gold pumpers don't even push that story very much. I mean, here's one I did. This was back 2017, September. China's debt problem is bigger than its gold hoard. I had to change the debt number. There's 28 trillion to 50 trillion. And what I showed was there was this whole idea that, well, all China has to do is revalue its gold and then it's game over, game changer because China will then crush the dollar because they'll have so much money's worth of gold. Yeah. Well, then I did the numbers and it's not going to happen. The amount of gold that they have, even the hidden gold, that was the other thing. China's lying, Sun Tzu, deception. Even if you count every ounce of gold that's possibly in China through individual holdings, through sovereign wealth funds, through central bank, People's Bank of China's subsidiary banks, state-owned companies. Let's say they have 20, 30,000 tons of gold to revalue all that. Current prices, you get $803 billion. So what? Maybe you get $1 trillion at $1,500. If it goes to $4,000 an ounce, you get $2.47 trillion. Goes to $10,000 an ounce, you got $6 trillion. They owe like $80 trillion. It doesn't make a bit of difference. China has taken on so much debt, doesn't matter how much gold that they have. Goes to $13,000 an ounce, they get $8 trillion. That debt number is probably going to double in the next 2 years. China can't. That's the problem with debt. Once you're on the debt cycle, it's just like anything where you get diminishing returns. You have to borrow twice as much and you get half the result. You borrow 4 times as much, you get a quarter of the result. You borrow 8 times as much, you get no result. And then you just have to borrow to stand still. And then you borrow even more and you go negative. That's what China is, and they know it. But the gold pumpers were insisting that China, was their gold buddy and was going to help it. Here's can China's gold, so October 2017. So 2 years ago I was saying this, but I was saying even before then, can China's gold save it from debt collapse? Back then, that wasn't the question. The question was, will China's gold crush the dollar? That was the whole thing. China's buying gold hand over fist, and Sun Tzu says, and they understand gold because they are smart, and Westerners don't understand gold because they are dumb. Yeah, I like gold. That doesn't make me smart. Nope. Yeah, and you still have these people on Twitter stuck on the gold pumper nonsense that China is smart. Sun Tzu, they're going to crush the dollar with a gold back yuan. And it's true. These poor people that listen to this stuff, which is most of the channels. Jason doesn't do it anymore. He's seen the light. Jason at Wall Street from Main Street. He knows that China is a Ponzi scheme. Sometimes he tries to tell me, and I'm like, Jason, I've known this for years. I've been on your show and we've talked about this. But good to see that he doesn't follow that line of thinking that China is somehow going to crush the dollar. Yeah, the gold pumpers don't tell him, not Jason, but the person we were kind of ridiculing, is that China is the biggest debt-ridden Ponzi scheme on the planet and no amount of gold will save them. I think Jason told the guy, good luck to you. I don't need to read, but the guy was trying to send us articles to read by Jim Willie. I said, no, thank you. Here's another one. It's not just that the Chinese government is going nuts with the debt. It was always, but the Chinese are smart. They save money. No, they don't. No, they don't. Chinese households now are big borrowers. China's cash-strapped families forego new appliances. Household debt hit $6 trillion and leaves the industry with 48.6 million unsold air conditioners. So it's not just the Chinese government that borrows too much. Chinese consumers have done the same. But Sun Tzu in China to crush the dollar, and China's smart and they like gold. They have this picture that the average person in China isn't like on a consumption binge, borrowing money and buying 3 different apartments in places that they'll never go see, buying stuff that they can't afford. Government's doing the same. They think that people in China wake up and think, oh, let's go and get some gold because gold is sound money and we are smart. And then they open up their book of Sun Tzu and they read passages to each other. And it's complete rubbish. This is what these people have drilled. They just created this fantasy about China, which is completely opposite of what's going on in China. China is borrowing a lot of money. The people, the government, and they're not immune from a debt crisis at all. And gold isn't going to fix anything. And they don't even have any silver. They're not even big silver bugs. So I think that's about it for tonight. You got Labor Day. Now, let's just see here. One of the things that happens after Labor Day is you start to get an idea of the direction of the market. And you got people coming back, the decision makers, the big shots, the bets en avant. They go out to wherever they go, the Hamptons or wherever in August, and they don't really do much. And then they come back full of ideas where they're going to start moving money around. And so that's where you'll start to see. You'll get an indication. Where's the gold market going? Where's the crypto market going? Where's silver going? Are they going to take a liking to an asset that no one's been paying attention to? Maybe platinum. Maybe they'll start dumping stocks. Maybe they'll start buying stocks. You don't know. So I like to watch the action post-Labor Day for the first few days because that's when they start to, I think, reallocate how not only where they want to invest, but also how to really start to figure out how they're going to position their portfolio for the year-end results and the year-end report to the shareholders. So I'm guessing, again, not investment advice, they're going to move into the cryptos and the gold and the silver because I think, not that they necessarily believe in them, but I think they think there's probably some momentum there. They can window dress their portfolios between now and the end of the year. You've got Backed coming out, which is an institutional trading platform run by the New York Stock Exchange. It's a crypto trading platform run by Microsoft and New York Stock Exchange. I dare say that's going to get some interest. I'm not saying they're all going to come back from the Hamptons and place trillion-dollar orders, but I assume a few of them will, and that probably will move the markets a bit. All right, let's see what y'all are thinking in the comments. I think that's it. Yep, that's all we got for tonight with charts. Again, the charts are on Smaulgld.com. And now the other thing is, I did want to mention, I'm thinking of doing a patron-only conference calls, a series of conference calls where the patrons can come on and we'll do a show or we'll do a discussion, and I'll send out the materials in advance so you have them, so I don't have to keep putting them up on the screen. I'll just say go to the next slide, go to the next slide, and we can look at them. Then we can either have a chat session where you type on Skype, it's pretty easy, or you can call in and we'll just have you on the microphone and you could ask your questions. And then the advantage to that is if you're a patron, I'll leave my phone open, a certain point during the day and maybe just take phone calls. And I do get emails from patrons and people who donate and send me notes and things like that. And I prefer that. This opening it up on YouTube and other places, you do get a lot of trolls. I really don't have that many of them, but I do spend some time responding to trolls, and they're not necessarily trolls. They're just kind of annoyed at my take on things, and I have to explain it to them, and then they don't like it, and it's like, well, okay. And that's just time consuming, and I'd rather spend more time with the patrons than with the public, so to speak, because the way I present stuff is not going to grow the audience. There's not a demand for someone who's going to tell people a more realistic view, or is going to crush these stories. I mean, the crush the dollar, gold back yuan, AC change, Shemitah, Fed can never raise rates, COMEX default. That's what gets clicks. People believe that nonsense. JP Morgan buying silver eagles. I come out and say all these stories are ridiculous, they're wrong, but Mike Baloney says, and that's what people want to hear. So I can't compete with that. I mean, I could if I wanted to go into full pump mode, but I'm not going to do that. So I'd rather work with the patrons and the people who have an interest in reality rather than made to feel good about buying something that maybe they shouldn't have bought. And I see that all the time. Oh, I feel better now. Why? You're still losing money. Well, there's hope now because yoga pants. Oh, okay. Yoga pants are really going to help the silver market. And that's what people like to hear. I mean, that's how you get viewers. You make people feel good. I don't think it's my job to make people feel good. At least not with respect to analysis. I'm not saying that you shouldn't make people feel good. You shouldn't do good deeds. I actually think I'm doing a good deed by trying to be as objective as I can about the gold, silver, crypto, and economics markets. But most people rather feel good. They'd rather be deceived and be deceived daily and by multiple parties and multiple channels. So if you're interested in that, let me know. I put a poll up on YouTube. There's a few people interested in it. You can do 50 at a clip on Skype for no charge. And if I got more than 50 patrons, then I could do 2 rounds of phone calls. And I doubt everyone would join every night anyway, and maybe wouldn't do it every night, but I think it's better to have a direct dialogue with the people who are most interested in the group that we have. I'd rather just keep it all, rather than just being out there and hoping we pick up a few people who want to hear something a little more rational. Rationality doesn't really sell that well. So if you have friends and you want to introduce them to the channel, that's great. But I'm not looking to pump the channel. I'm not going to do. I don't have ads on the site. I have ads, but I don't have AdSense on YouTube, and so I don't have any of that stuff. So I prefer just to keep it to the patrons, the subscribe stars, the regular people who donate from time to time, the mug stackers, than just to have this open YouTube thing, because I'm not going to do YouTube for much longer. I'll probably do BitChute, but I'd rather just work with the group that we've established over the last few years. I'm not really looking to grow it. So if you're interested, let me know. If you're interested in becoming a patron, make sure you do that. It's very easy to do. Patreon.com/Smaulgld or PayPal.me/Smaulgld or Subscribestar.com Smaulgld Mug Stacker Club. So there's many ways of getting in touch, and do appreciate that. So let's see what y'all are saying in the comments. We got a big crowd here tonight. Look at the live chat. Let's look at the live chat and see what we have. Whoa. All right. Coins AC, are you working on your Why Smaulgld Was Right video? I haven't had the time to, but I should. As I mentioned, and it's not bragging, it's just factual. When they were saying Fed can never raise rates, I said they would raise rates, and I gave the reasons why they would raise rates. If they wanted to remain the world reserve currency, they had to put U.S. Treasuries on sale, which meant paying a rate of interest, lowering the price of the bonds. I said they would do it. I said they would raise them multiple times. Even after the first time they raised them, but everyone said one and done, I said no, they're going to continue to raise them. They'll get to as much of a breathing room from the other central banks, and then they'll go back to cutting rates. It's exactly what they've done. The gold back yuan story, I was 100% right on that, told them that was complete nonsense. Every channel ran with that, never revisited it whatsoever. JP Morgan buying silver eagles, complete nonsense. AC chain is going to enslave the humanity with a SDR issued by a Chinese ICO. And this is the kind of garbage that you hear. And this attracts I think Lynette Zhang was behind that story. She wanted to know, and then they won't even allow American investors. We're all going to be left in the dark, and all of the, what's she saying? All of the assets are going to be digitized, and they'll be using this international currency called the SDR, and Americans won't even be allowed to buy it. Yeah, that's because when a foreign company does an IPO and ICO, they exclude U.S. investors because they don't want to deal with the SEC. It's got nothing to do with enslaving humanity. I mean, this is the kind of stuff that Dabu 57, whatever, like 500,000 people watched him raving about that. SGT report did that, and hundreds of thousands of people looked at it. I did a video debunking it. It got 5,000 views, and half the people hated it. But I went through the IMF explaining how the U.S. has a veto right over changes, that there's no way that the IMF itself is going to issue an SDR through a Chinese private company, an ICO, which, by the way, it was a failed ICO. It's still out there. It's garbage. But they showed a guy running through a pyramid, which meant something or other, and the U.S. investors weren't involved. People love this stuff. I don't like it. Some people don't like it when I criticize it. Anyway, let's see what else we have. I should just do Bernie. Some dealers might order a few bucks. Platinum, palladium. All right. High max, like 3 ounces of silver, 3 Smaulgld Mugs, says Pablo Pena. Well, you guys are having a private conversation. Oh, but you could do this. That's the other thing. I mean, the private conversations are nice, but I'm just scrolling through them, and it's not really on topic. I'm glad you enjoy it, but I don't see anything here to discuss here, so I'm going to get off. Bernie says they should be free. Max Strong, Smaulgld, you shouldn't underestimate the power of yoga pants. No, I mean, they're up there with mugs. They really are. All right, everyone. Well, I want to thank you very much for joining me tonight. And don't know when we'll see you again, but thank you very much. Have a good one.